Hello and welcome to AI Market News by LM. Okay, let's dive into this week's major market-moving events. It really felt like we were watching a series of market dominoes, all getting knocked over by one single event. Let's break down exactly what happened.
So the huge story this week, the one everyone's talking about, is this massive risk-off move that just rippled across global markets. And it all kicked off with an absolutely historic rout in precious metals. I mean, the sell-off wiped out trillions in value, and it left investors scrambling to figure out what in the world set it all off. And wow, it was just a sea of red right across the board. The S&P 500, the tech-heavy NASDAQ, and of course, precious metals like gold and silver all took a major hit. But look closely, notice the one asset that actually gained ground, the US dollar. Now that is the key piece of the puzzle that helps us understand why everything else was falling.
So what was the catalyst for all this chaos? Well, it all boils down to a single, really pivotal announcement that completely flipped the market's entire outlook on the future of the US dollar and interest rates. This is it. This is the event that kicked everything off. President Trump's nomination of former Fed Governor Kevin Warsh is what set all of these dominoes in motion. Almost overnight, the market's entire focus and its appetite for risk just completely changed. So why did this one nomination have such a powerful effect? Well, in financial circles, Kevin Warsh is known as a hawk. That basically means he favors tighter monetary policy, things like raising interest rates to keep inflation under control. He's also been a really vocal critic of the Fed's enormous balance sheet, arguing that it needs to be shrunk. So for the market, all of this signals a future with less cheap money sloshing around the system, and that changes the entire investment landscape. The first and most immediate effect of this news was felt in the currency and commodity markets. This was the first major domino to fall. Right, so a more hawkish Fed implies higher interest rates, which almost always leads to a stronger US dollar. And that is exactly what we saw happen here, with the dollar index jumping as investors quickly repositioned their portfolios. We can really see that impact in action right here in the currency markets. The dollar just surged against the Japanese yen, climbing up towards that 155 level as traders scrambled to adapt to this new potential future for US monetary policy. Now here's the knock-on effect. Silver, which is priced in US dollars, got hit particularly hard. A stronger dollar makes it more expensive for anyone buying with foreign currency, and that just crushes demand and sends prices tumbling. Silver's plunge actually extended to 33% over just a couple of days. Okay, let's follow the chain reaction. The risk-off mood didn't just stop with metals, no way. The shockwaves quickly spread right over to the stock market. US stock futures tumbled right across the board. The tech-heavy NASDAQ 100 was hit the hardest, falling a full percentage point. And this is a classic reaction. See, when interest rates go up, the promise of big profits way out in the future, well, it just becomes a lot less attractive right now. And that's what most of these growth and tech stocks are valued on. And adding to all that anxiety was a separate reality check that's been hitting the AI sector. Even giants like Microsoft weren't immune, losing a staggering $381 billion in market value. Investors are suddenly getting really anxious about the enormous and rising costs required to fund this AI revolution. As various news commentary pointed out, this created a really punishing environment for these stocks. It seems like any little hint of concern, whether it's coming from the Fed or from inside the industry, was enough to trigger a sell-off in some of the market's favorite AI names. All of this really makes us wonder, what's the core emotion that's actually driving the market now? It feels like we've hit an inflection point, shifting from one dominant sentiment to a completely different one. Well, believe it or not, there are actually tools designed to measure exactly this, like CNN's Fear and Greed Index. It tracks a bunch of different market indicators to give us a snapshot of whether investors are acting primarily out of greed, which pushes prices up, or out of fear, which leads to the kind of sell-offs we've just been talking about. Okay, so where do we go from here? With the market this jittery, the economic data coming out this week is going to be absolutely critical. Taking a look at the economic calendar from investing.com, the week ahead is just packed with high-impact events that could sway the market. We have key manufacturing data today, central bank rate decisions from Europe and the UK on Thursday, and then the big one, the all-important US jobs report on Friday. And that really leaves us with the big question for the week. Will all this upcoming data support this new hawkish narrative, maybe sending even more dominoes falling? Or will it show a weaker economy, forcing the market to rethink its sudden fear? The next few days are definitely going to be telling. This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in the summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. Thanks for watching. Don't forget to like and subscribe.